Okay, guys, good morning to all of you. Can you hear me loud and clear? If yes, give me a thumbs up. All right, or put an L and C for me right now. Thank you very much. Okay, morning to you, Jerry, Alex, Kelly, Pua, Maurice. Hi, guys. Hi, Freddie. Hello, Johnny, Kelza. How are you, Dennis, Janet? All right. Okay, loud and clear. Thank you, guys. Thank you very much. Okay. Guys, Stephen, thank you. All right, guys. Today is going to be a very, very big day. As you know, tonight we will have our, later on at 2 a.m., we will have the US Federal Reserve, outcome. All right, the question will be whether will it be 50 basis point, 75 basis point, or even as much as 100 basis point. So I'll get to you, right? The number that I think tonight, okay, straight to the point, I believe tonight number will be 75 basis point. Okay, I believe tonight FOMC meeting will come up with 75 basis points. Okay, I'll explain to you why I say that. Yeah, I'll explain to you more later on because I have my reason, and I'll share with you. And of course, from there, so I'll share with you what can we do to get the best out of it. Okay, so without further ado, let's start our morning MAO right now. Okay. Yeah, hold on, yeah, get my stuff up ASAP. Okay, go. Okay, so today is the 15th of June, Wednesday. All right, today we will have to guess, okay, what is the number that we're going to look at. And of course, who will win this game of bluff? Now, you know what's game of bluff, right? It's just like, like what we do is like, when we play games itself, you may call a bluff. Like in poker, you have Texas Hold'em. In this, we have this, what the Chinese play, the Da Lao right? Things like that. Okay. So basically, it's all right. This is where it all begins because now apparently the rational reason why Wall Street is filled with people looking to calling for 75 basis point because the put and call options clearly shows that the number of people betting that the market will tank is quite a fair bit. So I'll come to all this later, okay? And I want to do this again. I want to really do this again because I know that now we have one more day of movement. So now with what I just said moments ago, can I ask you guys, what do you think? Do you think that today will be a 50 basis point or 75 basis point or 100 basis point? Please key your comments right now. I would like to see the consensus that we have in this group of hours here. Now, 60 hours right now at the moment. I believe more will join us later. Can you tell me now, in your opinion, how many people, how many of you will think what will be the Federal Reserve? What is the number of basis point will they be hiking today? Let's key the answer right now. Let's all participate, okay? Since there are 63 of you guys here right now, it's still increasing. So let's just try. Let's just see. Okay. So I'm going to read out for you. Jerry, you're looking at 75. Freddie, 50. Anthony, 75. Hao Yang, 75. Chong Ming, 50. Evas, 50. Vincent, 75. Corinne, 75. Nicholas, 50. Richard Ang, 75. Chukiet, 75. NG 75, Alex 75, Johnny 50, Jennifer 75, Hanyu 50, Fred 50, Susan 50, Stephen 50. Oh, a lot of 50. What is 25? No way, Jennifer. There'll be no way it's 25. No way, yeah, because it's already minimum is 50 already. This one is confirmed one, yeah. Okay. Maurice is 75, Veron 75, Janet 75. North Stars North 50, okay. Kelsa 75, Nelson 50, Kelly Paul 50, Ching Kui 75. Okay, yes, indeed. I think that's a great question. Will the market be even coming off even at 75? That's a very good question, Dennis. It's an excellent question. I'll come to that later. Okay, all right. So what we can see that majority of you are still on the 75 side, about 60%, but about 40% are looking at the 50 basis point. Now, let me explain to you why it's that so itself as we go along with this MAO. And I can tell you this, originally, I also think it's 50 basis point. But when I saw one particular key information, that really changed my view immediately. All right. So again, guys, I'm no guru here. I'm a guy who go with fact and figures. As long as I see the fact and figures, I will have to make my decision accordingly. All right. So it's the same thing like, when if the market is supposed to sell, the fundamentals bearish, but if there's some good news coming out from the market, you may change the whole perception for this time being. All right, so who will win? So actually, this is a game of bluff whereby the Federal Reserve will have to fight with the boys on Wall Street. So that's why today is all right. Whatever number that comes out, right, the market may not behave rationally. So this is the reason why I'm saying this. Today is going to be a very critical day. Traders, in my opinion, you just have to go slow towards this FOMC meeting because you don't want to be caught by the craziness that may likely be happening because of that itself. Okay, I'll come to this very, very shortly. So of course, today my background, we had the Federal Reserve as a main thing picture. And of course, we have Kelly Wood. All right, Kelly Wood says that the market is near a bottom. Well, she's been calling for a bottom for quite a while already, since early start of mid of March, then after April, then after May, and now it's June. So yeah, eventually I think she will be right. Yeah. And of course, a couple of months ago, I already tell you guys that most likely there will be a chance of a potential recession coming in. So back then it's not right when I talk about this recession, this big R word, right? Many people were like shaking their head, Kel, you're crazy. The economy is doing very well right now. Why would it be bad with recession? But of course, as I say, I do read a lot and I do know that how the economy works. It may not be as qualified as the Federal Reserve people, but we all know that the economics 101, when you have growth being affected and inflation coming up, then naturally it's not right. We have a problem. Give you an example, okay? Give you an example, yeah? The last 3 years, because of COVID, many companies closed shop, right? You agree, right? Many companies closed shops. So if those companies close shop, even now if the economy is to recover, these shops or companies are no longer available. So that means that, right, the employment itself won't be there. That's the first thing first. Number two, even the existing companies right now, right, with the higher inflation, higher costing itself, right, they will not be employing people. As a matter of fact, they may even reduce because the bottom line is that the earnings for shareholders will play a part. So because of that, from last year, the December, we already tell you that most likely the forward guidance will drop and already happened. Then of course we have the first quarter is very clear, and obviously the second quarter now the numbers are even clearer. So it's undeniable the third quarter itself, right, will be even worse than the this current quarter. So with all these things, it's undeniable we will have a likely what they call a potential full-blown recession likely next year in January 2023. All right, that's how I view it. Yeah, it's going to be very important. Okay, so I'll come to all this later, but most important thing is that disclaimer apply as usual. My job is to share things with you. Your job is to make your own final decision. Okay, all right. So yesterday I had an ad hoc what they call MAO in the afternoon. So some of you were like, Cal, come on afternoon MAO. Is it would it be like permanent? No. It's just only for yesterday. Why do I want to share with that? Because I already tell you most likely yesterday will be a bull trap. Remember yesterday? So if you remember this, can you key that bull trap spot on? Because yesterday, right, the Dow Jones was going up, right? And I was just telling you this, most likely it will be a bull trap. And I was quite confident. I said that likely the Dow Jones may go below 30,550. And the Dow really went down. It went to 30,261, 216 in fact, because that was where we got filled with our profits, yeah, because we shorted the Dow Jones last night. And this morning when we wake up, right, well, the profit was given to us. It was really, really there. So if you have long yesterday because of whatever reason, then unfortunately you will have losses by the end of the night because the market came down. All right. Although the last half an hour, the market as usual pulled back because of hate of this FOMC meeting, but still, at least I was pretty spot on that, right? Thank you very much, Sherwin, Susan, Karine, Hao Yang, Anthony. BTSO. Okay, thank you very much, Kelly. All right. So if you missed what I shared yesterday, you can go to Trade with the Boys under 14th of June, which is yesterday, and click on it. All right, it's there. Okay, I have already left my message there itself. About 700 people have watched it. That's pretty cool. So all these are all made available for you, and it's absolutely free. You don't need to pay me a single cent. Think about this. I mean, who will give you ad hoc market review without you paying? I mean, of course, some of the America, what they call YouTuber, will do that. But of course, YouTuber, they still make money from the sharing, right? So for me itself, it's absolutely free. You don't need to pay me a single cent, but you just have to, do your own decision. All right. Okay. Well, since that BTSO has become a new thing, huh? Bull trade spot on. Okay. Thank you, Angie, Jerry, and Ching Hui. All right, go and watch it, guys. It's over there for an hour long. Okay. All right. So now the thing is this: inflation is a double whammy. Okay, it's the thing. It is good when the economy is doing well and the market is a bullish trend. So that's why some people don't understand this. They realize that, hey, I thought inflation is good, right? Because that means that sales will increase, bottom line increase. Yeah, that is fact. That means that if, let's say, a glass of water costs $1, example, a special glass of water, $1, and now it's $2, right? It's increment of revenue for the company. That is correct from that point of view. But if costing increases, let's say the wages increases, the cost of the material increases, advertisement, electricity, energy, taxation, everything increases by, let's say, example, by $1. Then, of course, the increment of revenue will not have any impact on the earnings. And if, let's say now, if any of the above costing increase more than normal, then, of course, what will happen next? Then you will have, even though the inflation has pushed revenue higher, but the costing is now more than your original price. And worse, because of that, the employment itself, right, in a downtrend market, if people are getting slightly no much different in pay, or their wages go up by lesser than inflation, then we have a problem, because that means that they may not want to spend. So that's why now in some part of Korea, South Korea, example, there are people are having a lot of they stop working, the drivers, in fact, because now apparently the costing of driving, pumping the petrol itself, right, is eating into their revenue, their earnings. So it's better not to drive. So if that happens itself, right, when you have lack of these drivers, your revenue will go down because your goods can't go out. So you see, this is a very, very dangerous situation. And I repeat what I just said one month ago, when our own Prime Minister Lee Hsien Loong came in and says that inflation is a very scary or dangerous thing itself, right? Indeed, I totally agree with what he said, because you can feel it right now. I mean, give an example at Singapore. We take a same $50 notes right now. You go to NTUC or supermarket, you will notice that the goods that you have in your trolley is ridiculous already compared to the past. Think about it, right? Look at the costing itself now. Every bowl with this noodle itself is $3.50, $4.50, $5. It's no longer $2.50. Of course, some places $2.50, but my point is, this is how it's going right now. Really, this is really getting crazy, guys. Okay. Okay. So why I'm talking about this? Because it's going to be it's not going to be a fun matter, yeah. Not so fun, serious matter. So you can see now, right? Example, like Shopee. Shopee is whereby we get our goods and materials getting sent to us and stuff. They are laying off workers in a food delivery. Imagine that they're what you call layoff workers. So what does it tell you? It's not only Singapore, my friends. It's around the Southeast Asia, and it's not only the only one. Even like example, cryptocurrency space, Coinbase, they're going to lay off 18%. That's a lot. That's almost like 1/5 of the workers. And I can tell you this is not the end. We have Tesla, right, laying off 10%. We have TomTom laying off by 500 people. We talk about Uber laying off potentially a big one. This Meta and Getir, all are leaving. They're all dropping people. So think about this. Is the economy doing well right now? Seriously, it is not. We have to face the fact the last 13 years I've been saying that this, right? The point is this, okay? Federal Reserve basically came in to save the day back in 08-09. They have to save the day because that's the only way to get out. And at time itself, China was available to support it. But the problem is after the recent pandemic itself, right? Even China, after the One Belt, One Road incidents, which they kind of fail in a way, and now plus this current situation now with pandemic and the shutdown in Shanghai and Beijing and Guangzhou, all these areas, all these plays a part. So because of that itself, right now, everybody have exhausted their dollar. printed too much, and now we have to pay for the bills. Now, of course, people have been asking this question: how come the US dollar is increasing despite their printing? Now, I already told you back a few MAOs ago, the reason why the US dollar is going up is because the interest rate is going to go up. Okay, and when interest rate goes up itself, right, the demand for the dollar will naturally increase. And because of the current inflation around the whole world itself, right, some countries are not able to print further, so they'll tighten up. But if they tighten up itself, they start to increase interest rate too. What will happen is that naturally itself, the stronger currency of the US dollar will overwhelm the weaker currency. And that's a problem here. And again, it's going to happen. So of course, that's why the yen itself, right, at the moment it's 134, 135 area. It really cannot go past 140. If it goes 140 itself, right, it's going to be a very big, heavy slap in the face, because the Japanese have been used to 105, 106 for quite a few years. Suddenly itself is like 40% reduction. Although the export-import may help a little bit, but the people buying power has reduced by 40%. So this is something that you must understand that will likely be happening. And of course, because of that itself, the fear and greed index is very clear now. It's at now 17. Now, a couple of days ago, it was at 33, 35. I was telling you it's a good level to consider to take some profit off the table. And of course, a good chunk of my students did it. So that was a pretty good one. Now we can see the very important numbers right now. Let's take a look here, everybody. So this is the 33, 34 area that I wanted you to take some profit, because we have seen the common points whereby the market kind of like resisted it, right? Okay. So after that, now it's coming down. So the next number we are focusing on will be approximately about this 11, 12, okay, 12, yeah? Now this is about 6, okay? So take note of these numbers, yeah? So if the number do come to 12, the last time we see 12, the market do have a bottom out, okay? A little bit of bottom out. Of course, if you go to 6 again, that'll be your best time to buy into the market. So to me, we are still on the way down. So until I see 12 or lower, then maybe it's a good time to cover short positions, yeah? Okay? So once again, yeah, thank you, Hao Yang, for giving me the validation. All right, I'm not the best. I'm just basically doing my part to just share all this with you guys. End of the day, I don't benefit a single thing other than you become my student, okay? Yes, Shopee logistic delivery charge, I went up by another $1. Yeah, indeed, that is how it works. You keep us increasing because we all know that there's no other choice. They need to cover, if not, their bottom line will be hit. And obviously, no investors or shareholder will like their bottom line to be hit regardless, yeah? All right, so that is what happened to the fear and greed index. Oh, sorry. Okay, so let's just look at today's and the figures right now. Okay, so we saw the PPI data was 0.8. It was much better. Okay, so what happens that price producer index basically was better than the than the previous. So, but it was in line with the forecast. So the market was initially happy with it, but after that itself, the market just pulled off, right? Okay, so tonight, later on at 8:30 p.m., we will have the core retail sales. I expect this number to be lower. All right, I really expect this number to be lower, and that will pressure the market a little bit. And of course, crude oil inventories, I still expect a negative number. Okay, I'll talk about crude oil shortly later on, but it is still this timing itself is it's not GMT plus 8, so let's correct a little bit, but it's just 2 a.m. It's the same thing here, but just in plus 12 hours, so it's 2 a.m. So 2 a.m. Singapore time tomorrow, okay, which is later on, okay. As in tomorrow means another 14 hours, yeah, another 14 hours. We will have the FOMC statement. Now you can see that now that this Jennifer just showed to you. All right, the previous number was 1%, and now they are forecasting 1.5, which is the one that everybody knows is a 50 basis point. So it won't be 25 basis point, okay? It won't be. It really cannot be. Because if you rule 25 basis point, the whole market will slam, okay? I'll explain more in detail later on, yeah? Okay, so that is the thing here. So after that, Thursday, we have the building permits of all this tomorrow, yeah? But key point is this, guys. We have low interest rates since 2020. After the pandemic happened by April, there was a jump down. That's why the stock market recovered. And obviously, after that, the stock market went all the way up, right, to new high during this period of time. And of course, during this period of time, Jerome Powell and friends came in with $5 trillion into the system, okay? So with $5 trillion coming into the system itself, naturally, with a low interest rate and $5 trillion coming in at the same time, that's why we have a stock market at the high. So now it's a very simple logical thinking. Okay, So think about this now. If let's say now Uncle Sam is going to reduce this figure and increase interest rate, so what do you think will happen to the stock market? So if the stock market goes up because of the low interest rate and $5 trillion, so it's a simple thing. You ask any kids, you will know that if the interest rate goes up and the reduction of the 5 trillion, which is quantitative tightening, what will happen to the stock market? So definitely the stock market will have to pull back. It's it's not difficult to understand this, but apparently it's all right. It's not made some particular experts, yeah, okay, they are saying that no, like it's okay, the market will recover, the market will be up. I really don't understand how they get this logic. Because if you ask anybody now, if 1 plus 2 is equal to 3, then 3 minus 1 equals to how much? If you tell me it's going to be 5 or 7 or 8, I will laugh at you. You understand my point? So this is the field that I am telling you now, that likely there will be a pullback of a certain magnitude. And it has really happened for the NASDAQ already. Yep. Okay. So of course, yesterday during the sharing session itself, not just yesterday, the day before, right, we do the MAO, right, I talk about this very interesting additional facts. Now I repeat, it's not about hocus pocus. This is scientific thingy. We cannot lie about it. Undeniable today, or tomorrow will be the 7-planet alignment, okay, whereby you have all the different planets. I can't name them to save myself, but roughly I know what they are. All right. So basically, it's all right. I double checked with some Western posters, articles that I saw was 5 planet, but when I changed the Chinese one, I saw the 7-planet thingy. Okay, fine. So what does it actually tell us? Basically, right, usually when you have this sort of planetary alignment, it's all right. It does have a bit of a magnetic field, what they call affection to the people, which is us human beings. So that means that most likely tomorrow, right, we will feel a little bit hyper. We may feel a little bit stressed up, or we may feel a little bit like, not thinking properly, something like that along the direction. Okay, so that was it back then, right? Now, the thing is this, on the additional fact of this is all right. I do look at some of this information here as well. Now, I checked the SWPC, the NOAA, and the government website, the FYS, the government US website, right? It talks about this. This is very interesting. There will be a G1 minor geomagnetic storming. It's likely on the 15th June due to the effect of the 13th June CME. All right. So what I'm trying to say is this: from today, 1 p.m. or so, Singapore time, 1 p.m., all the way to about 3 a.m. tonight. Okay, we will have a little bit exposure of the sun in a way. And this will actually make you feel a little bit hyper again. You may feel not that, you may feel a bit drowsy, in fact, or you may feel a bit of like imbalance and stuff like that. Okay, so of course you may say this is ridiculous, right? I understand that, but this is coming from my point of view, like what we study in the market. Now, this is usually used for people who do flight control airplanes so that they can prevent if let's say get the sun ray itself may affect the pilots and stuff like that. But we do see that there's some interesting co-relationship between this and the stock market. So we do know that tonight at 2 a.m., which is the FOMC meeting itself, and after that, 2:30 a.m. will be where Jerome Powell had to come in to answer his questions, right, with whatever he decided. Then, of course, all these might cause the market volatility to really hit. So all I can say is this, guys, sometimes things happen for a reason. You just have to be more careful, yeah? Just be more careful, okay? All right. So this is what happened last night. The Dow Jones, the moment it opened itself, okay, it was pretty flat at the start of the day. Then the selling paused in. The market tried to recover every time, but the market just couldn't cross the opening price of the day, which I tell you, opening price of the day is a very critical thing. Towards 3:30 a.m., it did go to the low. But again, the last half an hour, the market punched up because of the covering of shorts ahead of the FOMC meeting. Okay, all right. So this is what you see right now, okay? Let's just see what really happened last night. S&P 500 falls for the 5th day, slips deeper into bear market territory ahead of Federal Reserve decision. Okay, let's just look at the charts right now first. Okay, what do you mean by this? Okay, hold on here. Okay, so let's just take a look here. So this is the S&P 500 chart. Okay, on here. Now, you can see the difference here. This is actually the CFD prices. Now, CFD prices has already lost 2 days ago, has already went below the 80% mark, okay? Which means that already is in a bear territory based on the CFD figures. But of course, if you look back now with the spot market, okay, hold on here. Just give me a moment. Okay, here we go. Now this is S&P 500 now, okay? Remember that I draw this for you sometime ago. I show you that the projectile of the S&P 500. So back then I told you there will be some resistance over here, and truth be told, the market really come down all the way to this level. Okay, so let's us do the mathematics here, okay, everybody. Now the high of the S&P was at 4818, okay? The high is 4818, okay? So we multiply this by 0.8, you will get so-called the bear territory number. Okay, so you can take a calculator together. We can do it together now. You take 4818. Okay, I can do it live with you together. Hold on, yeah. Okay, we do it together live might as well, right? Okay, so 4818 multiply by 0.8. Okay, that's 80%, because the so-called Wall Street figure itself, anything off the all-time high by 20% is technically the bear territory. Okay, it's just only a number by Wall Street, but it's just commonly used. Yeah, you get this figure. Can you see that right now? Yep. So what you have on the figure itself is actually 3854. So the thing is this. The thing is this. The S&P 500 has already went below this figure. Yesterday closing was at 3735. So for some reason itself, right, they do not think that it's at the bear market territory. It's already at the bear territory market. But the thing is that the Wall Street doesn't really want to really say that openly itself. Somehow they don't want to call it as it, because why they come down, if they put the Dow Jones, it's a different story. So you can see now that actually the S&P is already at the bear territory area, okay? Now, the only thing that is now missing from the book itself is actually the Dow Jones, okay? So let's look at the Dow Jones now, everybody. If I put the Dow Jones now into the picture, okay, this is the Dow Jones chart. Now, back then in the Dow Jones chart, I told you just had to draw a very nice uptrend line. Once you break, you sell, and you do it repeatedly, you sell, right? You should be able to make some good money. So recently we did that, and of course our students have profited handsomely from that. Okay, so anyway, let's just do the same thing again. This is the spot market, yeah? The spot market, the high itself is 36,952. 36,952, okay? All right, then you multiply this by 0.8. This is spot market, FYI, okay? So let's just see the number again. Okay, 36,952 multiplied by 0.8. Now you notice that in Singapore, I'm probably the only person that will do live with you, count with you, and tell you exact numbers. I don't give you like ballpark figure like, oh, market may go up, market may go down, and then 200 point, 300 point thingy, right? I give you precise numbers, okay? And if you do that as well, right, you get a final figure. Yes, indeed, this Anthony, you got it correct, beautiful. The number itself will be 29,561. So it's pretty clear, very close to our number, which is the CFD number, 29,563. You see the difference there? It's exactly almost there. So that means that the Dow Jones is the only one that is still above board, okay? Dow Jones is still the only one that is still above, okay? I'm going to put it there for you right now. Okay, thanks. For ordinates. 29,561. So which means that, right, if the Dow Jones really want to go into the bear territory, the Dow Jones will have to go down all the way to this point to trigger. Now, this is going to be a very interesting thing that I want to share with you. Okay, now everybody take a look. The RSI is definitely near the 70% mark. Almost there, not yet, almost there, reaching soon, okay? Now, everybody follow me closely, okay? Now, the last time when this happened, I'll tell you a very important thing. Whenever the RSI closed at the below 30 mark, right, take note, yeah? You will notice that the closing will be near the low of the day, okay? Near the low of the day. Can you see that? Then after that, if the market is rebound, it will be basically rebounding by going above the OP of the next day. Okay, so very important fact to take note, yeah? Very important, yeah? Okay, so now we repeat the whole process again. You will notice that when the RSI came down back then in this February 2022, the closing of this particular candle that I'm showing you right now, the closing is near the low, right? And then what happened? This day itself, the market actually staged a very strong reversal. Now, the number, take note, yeah? The number was 34,070 on this day, which is the 24th of January 2022, okay? Now, the opening was 34070, okay? But the low itself was 33,150. So which means that the market went down nearly 950 points. 950 points on that day, and then it dramatically recovers all the way to close positive. You got my point now? 950 points, huh? Very critical information, okay? All right, so now you look at the closing of today. Today's closing, you can take note of that. The closing itself is not the low of the day. You notice that, right? It's not, right? So the thing is this, that's why I say there should be a little bit more downside to go. And from where we are right now at 30,364 to this point here itself, right? We are now, okay, let's do the calculation again. Okay. Now, some people really like my MAO because I get very detailed and give you numbers and I show you a lot of example. All right, some people will say that, Kel, you're very low-saw, talk too much yourself. And I'll tell them this, if you think that I talk too much, you can just skip all this in front, okay? And wait for me to finish my MAO. And then after that, we talk about the charts. Then you can bypass all this thing, okay? But this is the number, 800. Huh? 800, yes. We are now only 800 points, 803 points away from the 29,561 level. Yeah, we're only 800 points away. So which means that, right, if there is going to be a potential chance the market may repeat, right, this 24th may happen again. Yes, because that day itself, the market lost 950 points. That is more than enough than what we want. So this is something to take note of, okay? Now, to continue to show you that, you can see this happening again on this particular point here. This was actually happening on the 23rd of February. Very interesting, right? 23rd of February. So the next day itself, right, you can see the market opening price was 32,830. And the low of the day, interesting, was 33,000. Sorry, the low of the day was 32,272. So which means that the market lost about 600 points. And then again, it did a very dramatic recovery. Yes, a dramatic recovery. So what is stopping the market to behave to down by 800 points first and then dramatically recovery? I believe is tonight. Yes, write it down. I believe is tonight. Yes, I believe that tonight could see something similar. So tonight itself, right? If you are going to be trading US Dow Jones, I will really seriously think that you may not want to sleep tonight because this may actually really happen. Now, it's either that you happen by closing near the low, and then tomorrow we have the recovery, or today we have the sell down first and the dramatic recovery also within the same day. Do you understand what did I just said? So if you understand what I've just said itself, right, please key the word understood right now. Okay? All right, so if you understand what I just said regarding about how I feel about tonight's market itself, right, please consider. All right, then listen. I mean, if you need to play back what I just say, just play back in. If you understand or understood what I just said, key the word understood. That's what I want you to think about it. Yeah. Okay. So again, let me just make a quick video on this while doing this. So I believe that tonight itself, right, the Dow Jones is down 800 points away from the so-called bear territorial mark. And I strongly believe that the market will purposely come down to 29,561 level, the bear territorial mark, first. Then after that, do a dramatic recovery, either tonight or tomorrow, okay? Either one is out, right? The Dow Jones to hit this 29,561, right? The possibility is strongly there itself. So those people who understand what I just shared have already keyed the word understood right here, right now, right? So I just hope that tonight it really happened, and of course, hopefully we can make some money out of it. Yeah. Now to short more is up to you guys. I cannot say it will happen 100%. It's not fair to say that. It's like it's your money here. But I just say that if the market stays below opening price of today in a CFD level, then might consider to do that. Yeah. Okay. All right. Yes, of course. Tonight is the night. Okay lah. I don't know. Okay, please don't quote me. I'm just telling you my personal view, because from the way I look at how the Wall Street is laying their cards with the put and call options, and of course plus the this Wall Street, the intention of doing, and the chart level, timing, the planetaries, everything tells me that tonight will be a very volatile night. Yeah, tonight is a very, very volatile night. So yes, rest well in the afternoon. Then maybe you want to stay up to watch the excitement. Okay, I can be wrong. I can be totally wrong. Who knows? The market will don't move at all, but kind of low chance. Yeah. Okay. All right. So you understand my point? So if people actually now waited for my MAO to the back part, right, then they'll miss all this juicy part now. Yeah. I like to do things like that. I don't want to give always the same thing. And I want you to be always listening. And then I don't want you like, oh, Cal always talk about the market later on. So I skip the front part first. Yeah. If they miss the front part, then too bad. Okay. All right. I'm not a bad person. I just wanted to tell you that sometimes market doesn't move in a straight line. Okay. All right. Anyway, this is what I'm seeing right now. So we will see how it goes later on. Yep. Okay. Let's continue. Okay. So the thing is this, the S&P dipped further into the bear territory, as now we are bracing for further rate hikes from the Federal Reserve. And of course, this is one of the days whereby the market is going to take a wait attitude. I don't think we need to take a wait. We're already in bear territory. What do you want? Okay. So its only thing is this, the Dow Jones actually was up by 170 points, okay, at the start of the day. Then after that, right, it dropped from the highest point, 370 points. So it was a very clear bull trap, which I have been advocating myself, all right? And of course, we have now the S&P down by 22%, already in the bear territory. And of course, NASDAQ has lost by more than 30%. And of course, the NASDAQ is in bear territory for quite a while already, right? But you notice that the market just decided to keep quiet about it. You can see from the chart now that you put the NASDAQ in. You can see the NASDAQ itself is in the bear territory for a long, long time already. This is the 100% mark. This is the 80% mark. You know, the market has lost the 80% mark long time ago since the start of May. So for more than a month and a half, the market has been in the bear territory, but the market just keep quiet on this. It is in the bear territory, but there's very, very little talking about it, because the market really don't like bear territory, okay, in short itself. Yeah, they don't really like it, okay? So now, let me tell you now why do I believe that it's going to be a 75 basis point, okay? Let me tell you now, the main reason is this. Now, I'm a CNBC watcher. I don't like Bloomberg, because Bloomberg very dry, okay? I know that they give quite very good speakers, but the entertainment comes from the CNBC. I can't deny this. So Steve Lisman, right, is someone that I really follow, because I like his voice, and of course he has the front view whenever there's a FOMC meeting, and of course he's the one that read off all the important data. So Steve Lisman talked about that. Okay, now what is more critical is this statement here itself. This one, the Wall Street Journal reported the story first. Now this is important. Now why? Now, although CNBC itself is more for US propaganda media, in my opinion, yeah, but Wall Street Journal is usually the first, the very primary paper that usually the Federal Reserve or the government will use for their own so-called news and information. So yesterday, I didn't know that it was from Wall Street Journal that reported it. Only today I saw this second line. So maybe I missed it, I didn't read properly. Okay, anyway, the Wall Street Journal reported the story first. Now, this is critical, because if Wall Street Journal reported it first, then I can tell you 100% tonight is a 75 basis point already. You can forget about 50 basis point. It's a very high chance it will be a 75 basis point. Okay, this one I can tell you upfront already. Yes, very confident, yeah? Okay, so because of that, right, what will happen? Okay, so this is what I'm going to discuss a little bit, yeah? Now, Jerome Powell will really have to slap his felt in the face if he really had to do the 75 basis point. And if he does that, it's not right, he will have a hell time with the journalists later. So 2:30 a.m., when he comes out to talk to the journalists will basically open the floodgate to whack him, you know, a lack of better Hokkien word itself, okay, gonna be very wet. We're gonna whack him very hard. This one for sure one. Because you must understand, the last few meeting itself, 75 basis point was never on the table. And he was saying that it shouldn't be. And he was saying that he'll do it slowly. But now, because of whatever reason now, probably because Biden, probably inflation, CPI, PCE, mortgage loans, whatever it is, now they have to do it. If not, they'll be behind the curve so badly, the market will crash. I'm not kidding you. So because of all this itself now, definitely the journalist is going to go all out attack to ask him question, and he had to find a way to explain himself, and not the end. He has to find a way now to say what will happen next. That is the scary part itself. Okay, so I'll tell you more about that point later on in the alternate market news, but it's going to be very sure now, 75 basis point is a confirmation. Of course, would there be even 100 basis point? No, I don't think so already. 75 is going to hang this Jerome Powell at the neck. Anything more than that is all right. I think you lose his job. Okay. So obviously it's all right. We have Bill Ackman, the activist investor, right, coming in once again. He lost quite a bit of money in Netflix, yeah. So I think he's shorting the market. Okay. Now the Federal Reserve has allowed inflation to get out of control. That's very sure. Equity credit market now has therefore lost confidence in the Federal Reserve. Yes, undeniable too. So because of that, right, there is a thing. He says this: market confidence can only be restored if the Federal Reserve take aggressive action with 75 basis point by tomorrow and July. Oh gosh. Now the market is expecting a 50-50, not a 75-75. Okay, a 75-50 is already wow. Imagine it's going to be a 75-75, which is very possible. Or that will really drive the market. So the thing is this is where I feel that the whole thing starts to come out again. You see, imagine now the first thing is 75 basis point. The market will be like, oh my God, because right, half of the Wall Street is expecting a 50 basis point, right? So the market will sell. And then if Jerome Powell says that, okay, we may have to do another 75 basis point, the next meeting, oh my God, the market will sell even deeper, right? But because of that, right, what happened next? Hey, you're in control. You want to bring inflation down. Then naturally, it's all right. Wall Street will take advantage of this sell-off while retailer panic. Wall Street will come in to buy. Yes, exactly. So it's either that they're going to buy it tonight or they buy it tomorrow. Whichever it is, it's all right. Tonight or tomorrow, after a dramatic sell-off, the boys will come in to buy. I'll explain to you why do I say that. I got reason behind this itself. Okay? Yes, indeed, undeniable. As a bit of this context of this coming Friday quadruple witching, but we have Friday MAO talk about it, so I'm gonna skip this one first. Okay, so yes, indeed, Federal Reserve is giving the cushion, yeah, warning, and of course we have seen the last 3 times whenever the data or information comes from this something wrong with my laptop again. Okay, hold on, something wrong with my laptop. Gosh. Wait, so my mouse died on me. Hold on. Get too excited, my mouse died on me. Right. It's fine. Adrian, come help me to change my battery. Maybe it's died. Okay, now mind. While I'm getting my son to help me do this as well, right? I'm gonna continue with my mouse pad instead. Okay, so what I'm trying to say, yes, indeed, Peng Hua, you're absolutely right. Likely they are going to cushion it, just like how they cushion the CPI data recently, the PCE data. It came from Wall Street Journal. So every time when Wall Street Journal comes up with the information, very highly chances are right, it will happen. So we got a doubt, guys. So imagine this: 50%, or 40% of you are still expecting a 50 basis point. So naturally, there will also be a lot of people expecting a 50 basis point. You understand my point? Yeah. Okay. Okay. 1 second. Oh yeah, something is definitely wrong here with my mouse. It was all the way okay earlier. Let me just give me a moment, guys. Just hang on for me. Okay. Yeah, I get my son helping me now with my stuff. I use my mouse pad. It was all the way okay, right? Just suddenly just gone crazy. Okay. Anyway, let's continue. All right. Is it working, Adrian? Not, huh? My God, that means my mouse died on me. It's a new mouse. Cost me $100. You know, like $75. Okay. Anyway, so what I'm trying to say is this, guys, is that with that happening itself, right? Okay. The market will come in. I'll speak to you more in detail in the alternate market news site itself, and you understand this even better. So don't go away, yeah. Okay, wait, I need to do this. Okay, now I have a problem. My mouse is not with me. Adrian, can you lend me your mouse? Thanks, bro. Thanks, Adrian. Good boy, yeah. Okay, new mouse. Okay, you need to start up. On. Oh dear. Okay, my mouse is moving on my mouse pad, but somehow all the mouse that is coming for the external mouse I'm using is not responding. Interesting. Is that a sign? The market will break. Trying to figure out. Seems that's not working. Oh gosh, maybe I need to restart my computer. Okay, never mind. So I just leave it with that. That means I'll be lesser drawing now because it's really mousepad not easy to draw. Okay, never mind. Let me just bring you some news now. Okay, hold on, yeah. Okay, so just look at the screen right now. Okay, so first of all, we just have this China economic numbers came out better than expected. Seriously, I mean, seriously, their industrial production rose by about 0.7%, which is the same as 0.7% last month. Gosh, okay, I'll leave it there. Yeah? I cannot expect this to be there. But at least they did say that difficulty and challenges remain. Yeah, but how can that be? We all know, right? Cannot be, right? But anyway, okay. Wholesale prices now rose by 10.8% in May. Oh my God, it's a record annual pace, okay? And that's again reason why now, right, the 10-year note, the 30-year note itself, the mortgage rate is going crazy. And of course, we have more layoff coming in. I can tell you this, guys, trust me, by September to October this year, we will have more people being laid off. I'm not kidding you. So picking up a skill right now, learning how to trade right will definitely help you a little bit, yeah? Until when the time is better, then you may want to go back to the work industry. Because I can tell you this, it's just a matter of time. It will come in very soon. By October, December, yeah, maybe. So now the scary part is this. Now, all along it's not right. The 30-year mortgage rate has been very, very stable. Now, do note, it's only 2% to 4% last year. Sorry, in December, sorry, my bad. In December, 2 to 4%. Suddenly, it's up to 6.28%. Now, that was a week ago was 5.5%. So that means that if your house is, for example, you take a mortgage for $1 million, you're going to pay additional $40,000 just like that. This is very scary. Don't you think it's very, very scary? And the number is it's not going to be it's not small at all. It's really causing it.
Mommy gave me a flat battery.
Oh, okay.
It was refilled with a flat battery.
Flat battery.
Yeah.
Okay. Hold on. Okay. My son is helping me now. Hold on.
Yeah, there.
Oh, it's working. Thank you, Adrian. Okay, see, my good boy. Okay, so luckily not spoiled. Okay, what brand is this? Fraser. Okay, so you can see right now, right? This layoff is going to continue, and this is going to happen. So we are actually having a little bit of potential of what happened back in year 2000 and also back in 2008. Undeniable. It's actually repeating. Okay, it's quite scary. So it's not 1929, that's for sure, but a 2000 and 2008 itself is a bit of a similar. So now we are actually facing a problem. That's why a 75 basis point and a 75 basis point does make some sense, actually. And of course, now the 10-year Treasury yields have hit 3.48%. That's the reason why the market is actually expecting between a 75 to even 100 basis point. So let's just do the mathematics here. Let's say the market expects 100 basis point, example. So it's additional 50, right? So you look carefully, if 50 is expected, if you divide it by 2, it's 25. So you put back the original 50, right, that was on place. That means that, yes, it's going to be a 75 basis point. Yes, that is how the market is looking at it right now, okay? So this is actually very, very scary. And you can see that this is how it goes all the way up the south until about 3:15 a.m. Then there was some pullback. So that's why the stock market recovered a little bit. So if this number now is that 3.43 yesterday, and if now the current level, let's take a look now, the current level is moving right now, okay? The current level now is slightly below, pull back a little bit. If the market, if later on it goes higher again, that means the stock market will pull. And I already tell you, right, my view was at 3.3. I didn't expect a 75 basis point. So that's why I stopped here already. But now it's even higher. So it's beyond me right now. It's really beyond me right now. But I did mention to you, right, a very critical thing that I shared with you back then. If you look carefully at the chart, guys, okay, we are not out of the woods at all. If you look carefully, the long-term chart of this, okay, you can see right now, we were, okay. Now you guys can take a look on chart right now. You can see that we were here back in year 2018, 2019 area, whereby we were at a high of about approximately 3.25%. Then after that, the pandemic happened. So the Federal Reserve had to do what they need to do. The pandemic happens and stuff like that, okay? So what happened now? We are even now higher than the last time, okay? So what is very scary is the time itself, the interest rate was at 3%. Then it brought down to 1%. Okay. So now we are back to 3%, right? But now currently it's 1%. So we have to go up. So we really have to go up. So by going up itself, even by 75 basis point, it's only 1.5. So there's still more upside to go, right? So expecting another 50, right? So maybe 2.5%. So if let's say if this current inflation now is at the current inflation now is 8%, 8.6%, the current inflation figure, we still got a long way to go. So which means that, right, there is a chance that the market will have to go even higher just to go to the middle point, and that could be as high as 5%. Oh my God. So think about this mathematically speaking, okay? If let's say now if the interest rate has to go down to 5% for some crazy reason, then of course the stock market would go down by another 2,000-3,000 points, right? If we're talking about really equivalent mathematics here itself. So that's the reason why I'm quite confident to tell you that 29,563 to reach by tonight or tomorrow is actually a very, very high possibility. Okay, that's my reason. Yeah. So of course now the thing is this: the Federal Reserve balance sheet is also reducing by today. Oh my God. So the thing is this: in addition to the almost certain interest rate increment, Federal Reserve on Wednesday will begin reducing its asset holding, a process that is expected to drain trillions of dollars in liquidity from the financial system. Oh my goodness. Oh my God. The balance sheet was supposed to be taken out early of the month, but apparently they didn't do it. So now they're going to do it, where right in front is an FOMC meeting. Oh gosh. Do you understand what I'm trying to say now? Oh my God. Now, this thing was supposed to start. The process unofficially began in the start of June, but for some reason, they didn't do it. So only now they do it. So 15 billion in treasury will mature, and another 33 billion will continue to due by the month. And because of that, they will allow this total 30 billion to roll off in balance sheet. Now they're not reducing it, they're just rolling it off. So they don't want to buy anymore. They want to stop it itself. Okay, don't stop it. They want to stop it, okay? While reinvesting the rest. So which means that, right, This will continue. And don't forget, after that itself, right, by June, they'll even have more to roll off. And this is what I call as quantitative tightening. Oh gosh, okay. So this has been ongoing for 14 years. So dear all, the reason why I will tell you upfront, be honest, it's not rubbing anybody here. If a trainer has no more than 20 years experience, right, he will likely have no chance to see a bear market. But since 2009 until today, the last 13 years, right, the market has been bullish all the way. Every pullback to RSI 30 or 50 is a buy. So cover 2 eyes is a buy. So everybody basically has benefited for the last 13 years because Federal Reserve have been there for 13 years. So if any trainer that came off recently itself will have a lot of headache now because they will not be able to explain to their students why the market itself is coming down, despite the technical level that they had last time works, but now no longer working because the market has changed. So that's the reason why, fortunately for me, I started back in year 1999. So I got to see all the nonsense stuff from back then until now. For the last 22 years, I'm in the market. 22 years. So seriously, if I not learn anything, right, it'd be very sad. So I do learn something in between. I'm still learning as a student from the market, on the market. So I'm telling you that right now, we will have to go through this bear. We will have to go through this bear and get it and face it on. And after that itself, right, once we have faced it in, then you can use back your same theory that you learned from your other trainers to go and buy from the bottom. But of course, it will take a longer time because there'll be a lot of stale bull in the market. So again, this will take another 3 to 5 years for the market to resume its upside again. If let's say the recession really kicks in by later, next year and stuff like that. Okay, got my point? Yes, indeed. So this is something that I was like, oh gosh, okay. So, I mean, seriously, I didn't know that. I thought they already done the thing. But when I saw the Fed funds asset didn't go down, right, I suspected this, and now with this confirmation on this report, right, it's even worse. Okay, it's even worse. All right. So now you understand why itself. I'm very surprised that Cathy Wood is saying that we're close to the bottom. Maybe she's right. We're close to a bottom, but the bottom is when. So I'm going to put myself into this. Okay, I'm going to put myself into this. I believe that a bottom will likely be happening around July, if not August, okay? The bottom, okay, let's say this, okay? I believe that there will be the bottom, not a bottom, the bottom, July and August, okay? I think that will happen, and that will be a very good time to buy into some good stocks. So would I conduct a preview to help you guys to buy stocks later on? Yes, maybe I'll do that because I'm also very interested to buy some stocks. So we'll do that, okay? So let me just ask you guys now, there's 108 of you, okay? How many of you would love to have me conducting a preview to buy stocks in July or August? Okay, if you want to do that, right, I want Cal preview. Okay, do me a favor, let me just try this out, okay? Let's say now, if you really want me to conduct a preview to help you guys to make money from the stock market itself on the buy side, right? Okay, right. For me now, ME is fine. I want Cal preview also fine. Easy, ME be easier for you, okay? All right, that means that we will concentrate on buying stocks and then make the money together, right? Now we have made money together on the sell side. I will think that it'll be a good time to look at the buy side. But again, I would say we need to prepare ourselves first. You cannot just blindly. Some shares have very bad stale bulls, and you don't want to fight with the stale bulls. You want to fight with the fresh funds. Yes, so stuff like that. Okay. So let me see how many of you like it. Wow, the numbers are very encouraging. Okay. Wow. Thank you very much, guys. All right. I say again, it's all about this. Okay, buying. Okay. I've done a lot of selling, so that's the buying. Okay. Thank you very much. Wow, there's so many of you actually really likes to have my review. Thank you very much. Okay. All right, really appreciate that. And thank you. Really appreciate that. Okay, all right. Last but not least, is all right. Now let me explain to you why this 75 basis point is hopping non-stop. Okay. Now JP Morgan, Morgan Stanley, JP Morgan, Goldman Sachs is all right. The economists are all calling for 75 basis point. Okay, and they even expect a 1% hike, which is potentially a triple risk. Okay. Okay, so the thing is this, you can see now JP Morgan, Michael Ferroli says that it should be 75, okay? And of course, Goldman Sachs, this also looking at 75, okay? So everybody now is looking at 75. So earlier was 50, now 75. Okay, so let me explain to you why they want to do a 75 basis point. I'll explain to you, and it's all about money. Okay, Wall Street is a place that is all about money. All right, so let us begin, shall we? All right, let us begin. Okay, all right. So of course, now the question is the Papa Bear coming in? I believe Papa Bear is about to come in, and it will likely come in tonight. But the bulls will also be waiting for the Papa Bear. I believe the bulls are waiting for the Papa Bear to come in. So the Papa Bear may be stunned by the bull initially. Okay, the Papa Bear might be stunned by the bull initially. Okay, so be careful of that. So what happened is then the bull will come in and push Papa Bear back into the curtains. Okay, but after that, a while later, Papa Bear will find strength again and push itself back into the stage. Okay, so got my point? Do you understand what am I trying to say with this example? Do you understand? All right, okay. Yes, Judy. Yes, indeed. I remember you say 100 points coming in. Yes, I remember, and I laughed at you. I apologize on that. Because at that time itself, right, I also never think that it will go to that point. So yes, Judy, you must accept my apology. Okay, I apologize. You know, one thing is that I want to read off something for you guys before we go into this. It's actually come from a friend of mine called Arun. No, Arun? Yeah, Arun, the solid trader. He said this, okay, right from his very wording here. Cal, I told you before, your dedication always inspires me, because you are the one that will always admit wrong when you are wrong. You're the first to admit. I really admire you on this. Okay. No, I'm not trying to uncut you. Yeah, this one is his very words. Okay. You look at some analysts. I don't quote their names. When they're wrong, they will just elect a little bit here and there. But for it itself, right, for you, just go straight to the point and you actually accept apology. You just do apology. So thanks again, once again, Judy. Yes, I remember that I laughed at you for the 100 basis point because I was never expecting that to happen. Okay, so maybe you really had some inside information. Yeah. Okay, so if you understand what I just said itself, right, guys, this is where it is. Would that be a 50 basis point or would that be a 70 basis point? So no more, in my opinion, there'll be no more 50 basis point. It will be a 75. Okay, let's just do a bit of twisting here itself. Now, what if, let's say, Jerome Powell insists that it's going to be a 50 basis point? Oh, I tell you, if he really do a 50 basis point, Wall Street will sell the market even heavier. Now, of course, you may be stunned by this, right? Why? Now, let me explain this to you. You see, let me do it slowly with you now. Yes, now the market has priced in 75 basis point, right? And if Jerome Powell tonight really do what he wants to do, 50 basis point, so what happened? Wall Street will whack him very hard and say, why would you want to do a 50 basis point when you should do a 75 basis point? Because the 10-year yield is already at 3.3%. So he had to argue his way and wriggle his way, whatever. And Wall Street, once they feel that's not correct, they'll just whack him. So that will create a lot of mayhem to the stock market. So he must really think carefully what to do. But if he do 75 basis point, Wall Street also whack him and say that, why you change your words and stuff like that. So no matter what he chooses today, it's going to be hell for him. No kidding. So watch his body language tonight. The Wall Street will watch his body language very closely tonight. Okay, and they will act on it. Because why? Because why now, right? You must understand. Jerome Powell, sorry, Joe Biden, all right, keep on saying that OPEC going to sell oil to them or much lesser, right? And you can see this is a cartoon as a metaphor. Okay, whereby Donald Trump slapped his face, slapped Robin's face. Okay, you will handle an energy independent country. Okay, now for the sake of God, turn the oil pipeline back on. Okay, all these are jokes, yeah. But I'll tell you why do I have these jokes for you. Okay, because now, right, fuel prices in America is going crazy, and my cousin telling me that it's not case over there. People are really not going to work. So really, so all these cartoons began to come out. It's all right, like Fred Flintstone, myself go back to Stone Age. Okay. Now, what is happening over there? You must understand this. The petroleum, the gasoline prices is really crazy in America right now. And it's seemingly there's only one way. It's up. It's crazy. So what is all started? Because you must understand, from the very first day when Joe Biden became the president, right, he revoked the Keystone XL. Now, Keystone XL is the Canada gas pipe. And he don't know for what reason, he just said no to it. And because of that, right, you must understand, when you cancel it itself, right, the key permit, right, there could be at least 600 to 900,000 barrels of oil that can come in from Canada. But the thing is this, right, basically can't. Oh, is it Biden just announced 45 million barrels of oil? Okay. Oh, is it? Okay, let me just check the news, yeah? Is that so? Let me just bring it to you right now, yeah? Okay, let me just put it in. Okay, let me just do a search on this right now. Wow, great information. Thank you, Sean. Biden crude 45 million barrels. Oh, here we go. Oh, that is about 4 a.m. this morning, yeah, about 8 hours ago, yeah, around there. Okay. So the energy price is 45. No wonder that oil price came off a little bit. Yeah. Okay, fair enough. But 45 million is not going to save the day. Yeah. It's just only all right. Okay, up to, yeah, up 45 million. Okay, up to. So the sale will take place only from August 16th to September. So which means that it's still going to be some time. It won't be immediate. Oh gosh. Okay. So now it's only 1 million oil per day for 6 months, right? So now it's another 45 million, but that is only from August 16th to September 30th. So again, the market will react first, but the market will after that rebound most likely. Chongming. Power will kena COVID and stay away from screen. Okay. So now the thing is this, all right. We know that the Saudi is really not very comfortable. And of course, Biden is flying over to meet them. So of course, the thing is this, we all know that, right? We all know that, we doesn't really want to do this. So now they're going to remove sanctions to buy from Venezuela and Iran, right? We know Iran, right? We know that. But I think the main gist of it is here itself. It's just like now Biden is watching the back of this Jerome Powell very, 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 very closely. And of course, the main thing is this: you're telling him, please quickly now hike the interest rate ASAP, as high as possible. Yeah, as high as possible. I think that is the main gist of it. Because right, you know what happened? Now, 2 weeks ago, the chance of a 75 basis point itself, right, was only less than 3%. Then after that, last week, it up by 24%, and now it's 88.95%. Oh gosh, okay? So that means that the market is going to hit 75 basis point today. And of course, look at this is the Fed fund rate itself, right? Look at the numbers, it's really shooting up itself, and that's the reason why. But this is the main driver. Now, basically, right, as you just saw an S&P 500 charts, I'm just bringing it to you, yeah? Everybody to go, okay, wait. Sorry, wrong chart. Here we go. Now the S&P 500 now, as you can see, is trading at, as the last done price itself is here. The last done price of the S&P 500 is at 37.35, right? 37.35. Now, if you look at this thing here on this side, my chart here, that the put and call options are also heavily ranged at around that price. So which means that now, right, a lot of Wall Street guys are short in the S&P 500. They are short, and it's like hundreds of millions of dollars, okay, into the position of this. So anything lower is what they want. Anything lower is what they want. So the last time when Morgan Stanley says that, right, they're looking at 3,600 level. So let's just do a simple mathematic here again. Okay, let me just spring to you now. Okay, so look at it, guys. Okay, currently S&P now is trading at 37.35. Okay, 37.35. Okay, and the Dow Jones now is trading at 364. Okay, so this is the S&P. This is the Dow. Okay, now with my own calculation, my very own one, Okay, one S&P point is equivalent to 8 points of the Dow. This is based on my own personal mathematics, okay? So you don't find this in Wall Street, this is my own. Okay, so let's say now we do a hypothetical expectation. If let's say now really S&P 500 is to go down to the price that they all were looking at somewhere around here, 3668, okay? Right, what will be the Dow Jones then? Can anyone do that mathematics? Do you understand what I'm trying to say? If one S&P point is equivalent to 8 points of the Dow Jones, if let's say now Morgan Stanley and friends were all looking at S&P to drop down to 3668, okay, a number that they arrived with mathematics, okay, then the Dow Jones will go down to how many points? Anyone can do the maths now? Adrian? Let me pour some water. Thank you. I see a lot of numbers coming out, all different numbers. Okay, all right, let me explain how to get it. Okay, okay, everybody look at the screen right now. So let me explain this to you. Maybe my explanation not good enough. Okay, so S&P now is at 37,3735, okay, 3735, okay. Thank you, Adrian. Then if let's say S&P is to go down to 3668, so you know minus 3668 to get the difference between them, that will be 67 points, okay? 67 points is the final figure, 67 points is the final figure between two S&P points. So 67 multiplied by 8, you get about 536 points. Yes, indeed. So 536 points, you take 30,000 minus 364 minus 536 points, you'll get a final figure, yes indeed, which I think some of you got it correct, 29,828. That means that, right, if let's say the S&P really comes down to this particular figure, 3668, then the Dow Jones will drop all the way down to the 29,828 level. Okay? All right, so if we're going to bring it down further by one more level to the, let's say the flat figure of 3600 level, right? 3600 level. So it'll be the same mathematics here as well. You take 3735 minus 3600, you get about 135 points. You multiply it by 8, you get about 1000 points, 1080. You take 30,000, 36.4 minus 1080, you get somehow around 29,284. Okay, so I don't think that this figure will be reached. I think it will be something in between these two figures, so you can get a rough estimate figure that what will happen. Okay, so that's why the target of 29,561, the chance of that happening itself, in my opinion, is pretty strong. In my opinion itself, is pretty strong. So of course, if anyone can work it out for me, right? If let's say we do the same mathematics itself, right? For the Dow Jones to hit 29,563, then how much would that be? So it's the same mathematics. So take 30,364 is current price right now. If it goes down to 29,563, so what will be the net difference there? So 30364 minus 29563, you get 800 point. Yeah, okay, 801. Okay, so obviously 1 point S&P is about 8 point Dow Jones. So S&P will have to drop 100 point. So now S&P now is at 3735, right? So which means that the S&P will have to drop down to 3635. So which means that if those who are people are shorting S&P, right, 3635 would be the S&P support level for today shall the Dow Jones do go down to 29,563. Okay, got it? Quite cool, right? This mathematics result. Now, is this actually a real mathematics? Is it actually even real in the market? Nope, it's not there. Now, we don't have that. But I can give you it's just a rough estimated figure, okay? It's a rough estimated figure, okay? Because if you actually do this, if you take the S&P now, currently now it's 3735, right? Okay, current price right now. You multiply by 8, you get 29,880. So you don't actually get the current Dow Jones now. Because the current Dow Jones is 30,364, so 500 points away. But you must understand S&P 500 inclusive of the NASDAQ components, okay? So this is just a ballpark figure, but it has served me pretty well the last 15 years. So I can tell you that, right, this can make some sense over here. So you make your own decision, okay? Anyway, this is just extra information for you, okay? Extra information. All right, okay. So now you understand why it's that, right? Why would the Wall Street now really wants keep on saying 75 basis point, keep on doing that? Because they are now very heavily short. So if they are very, very heavily short in the market, so of course they want the price to go down. And if the price goes down, they're able to get the profit. And of course, when the price goes to 80% mark, conventional indicator algorithm will come in to flush the market by selling, right? So think about this. The algorithm sells, which is the mutual funds, the hedge funds, the dark pool, they sell, right? Example. Then the big boys will be able to come in to buy from them. You understand? So which means that now, if the market now is moving, and then this is the bear territorial mark, right? Which is the 29,563 level. So what happened? The boys will push it down all the way, trigger this sell stop will be triggered, right? So a lot of these fund managers, mutual funds, government funds, or whatever funds will use the 20% as a guideline, will have to trigger the algorithm to cut loss, right? Then the boys will come in like sharks in the water, okay? When blood spill in, they'll come in very heavy and then buy up. So once they buy up the stock, right, what happened? The market will rebound. You understand? So this is what I'm trying to say. It's actually a very big trap. And putting Jerome Powell right in the spot down there itself, okay? You have a decision what you want to do. So to me, it's whichever button he pressed, boom, you understand? So it's just like those movies whereby where the bomb is about to explode, right? And then those bomb guys have to discharge the bomb and stuff. You know, like all great movies, no matter which wire they cut, it will explode because why? There's a fine wire at one of the points. Okay. So anyway, this is just a movie buff. Okay. So anyway, that is my view here. So okay. So that's the reason why I'm kind of feeling that it's just, yeah, it's like checkmate lah, in short. Okay, so that's why if you bluff, we spot you, your nose get longer. You don't bluff, we whack you, it's still gonna get longer. All right, so you can see on the numbers here itself, tomorrow the number is huge, okay? Tomorrow the number is huge, 1.74. Today already has completed, so it's like now it's reduced a little bit, but tomorrow is 1.74, but very interesting. Next week itself is 0.94. So that's why the market seemingly is looking at a call side after tonight. See, all these are all well planned. Yeah, all these are numbers that you don't see from many trainers in Singapore, because all these really need you to be a trader and you need to go and find out more detail for yourself. And look at it, the put open interest is huge, right? It's 3 million, no? 3 million open interest. That's a lot. That's a lot. Okay, all right. So understand, guys, if you love this, it's all right. If you really love today's sharing, okay, love today's sharing, you key the word love MAO. So if you really like what I've been doing and you enjoy this, is all right, can you put the word love MAO so at least I can show once again? Okay, so I'm gonna ask you guys now live, okay, whether do you like my MAO? Okay, if you do like it, it's all right, just do me a favor, just put that love MAO. Okay, I'll put a video right now. Okay, audience, here is how this is Kel doing a little survey and asking people down, do they love my MAO? And this is where it's coming now. Wow, you see, so many people likes my MAO. Okay, they like it very much. Okay, they love it because I asked them to put it. But of course, if people don't like it itself, they won't do anything. Not too bad. This time was 100 plus people, not but 96 near the lunchtime. I expected that. So apology on the taking of time, but I'm happy that you guys love the MAO. All right, thank you guys. MAO stands for Market Analysis and Outlook. Yeah, it's not meow or mao. Okay. Okay, guys, thank you so much once again. Appreciate that. Okay. All right, so now look at the charts and the market's already moving. Let's look at it right now. The bull goes moo, the bear goes grrr, and the lemming go is different this time. Now, Leslie, you just asked me, right? Would there be a chance of a 75 basis point? Sorry, would the Dow Jones go down to 75%? I don't think so. I don't think so. I think the market will go down to the 80% mark because that will be already 2 to 3% already. Of course, if the market go crazy, if they really want to dive it down, so it is possible. Just a chance is just slim, at least for this round. Right, I believe that it will happen like this. Leslie. All right. So this you can see now the 80% mark is here at 29,563. All right. So most likely, because yesterday we have seen the bull trap yesterday, you can see a long tail on the top side and then close down. Normally, this is called a bull trap. And I explained to you yesterday, for those who joined me yesterday, I told you, right, the MLP is very critical and the market missed the MLP just by a hairline yesterday. So it's very beautiful. The market went up first and then pulled back, right, and closed down. So this is actually a bull trap. So the thing is this, where will be the very nail biting point? It will be here. Everybody take note, the biting point will be the low of the day. Yesterday, sorry. The low of yesterday is going to be very, 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 very crucial, yeah? Okay, the low of yesterday is 30,000, wait a minute, sorry. 30,158, yeah? 30,158 is a crucial number. If the Dow Jones goes below 30,158, right, which is like still about 200 points away, okay, the market will sell very fast. If the market breaks below the 30,158, the market will sell very fast, okay? Yeah, then it will flush down and likely it will touch this figure. Okay, most likely it will touch this figure. Now, if you look at the projection here itself, okay, this is using my own channel drawing. So what I did was my own view. Okay, I done my own way of drawing. I mean, I'm not here to like stand for you to mark right or wrong. I told you back then, it's all right. I don't want to use this guy. If I use this, I had to twist my channel to this way, right? It doesn't make sense. So I say, no, I don't think this is the bottom. That's why I still use the A and B over here. So A and B projection will be C, right? Okay, so now it's, let's say we go crazy, huh? What if the market really, really, really come to projection C? Then how low will that be? Wow, that is crazy. That will be about 29,050. So which means that if let's say the market really go crazy tonight and touch this base itself is 29,060. Write it down, guys. 29,060. Now, I will tell you this, my friends. If the Dow Jones really come down to this figure, 29,060, I will definitely buy some Dow Jones and keep it overnight. Okay. All right. I repeat myself. Okay. If the Dow Jones really, really, really goes down and touch 29,060 around there, even can be 100 or okay, I will definitely buy some Dow Jones and keep it overnight. I don't think I'll be too far wrong. Maybe I must take some risk overnight, but I think this risk is actually pretty, what do you call, worthy risk. Okay. So straight away, people ask me, can do buy limit order or not? Yes, you can try if you don't mind. A buy limit order at 29,060, you can try. Disclaimer, yeah? Now, why? Because the RSI is really already at a very, very low level. And I told you before, the last time when this happened, the market did drop 1,000 points and then recover strongly. It happened again, a drop of 800 points, recover strongly, and the high point recover strongly. So if let's say the Dow Jones really behave like this tonight, example only, I'm not saying that it will happen. Oh, then yes, you can try. I mean, all this thing is all maths thing. You can just try whether or not it happen again, right? Okay, whether it happen or not, right? Really, that's not the most important thing, okay? Because we won't know. No one can predict future. If you can predict future, right, we won't be here today. Correct or not? But since we are watching this together, then of course we can just support each other by doing this, and we see what will happen after that itself. You got my point? Yeah. So I repeat now, guys, I'm just here to help you guys to, weigh in and consider and do your calculation. Okay. So whether it will happen or not, right, we just leave it alone. Okay. Can? All right. Okay. Let me do this. I'll ask everybody this question now. Okay. I want to ask this question. Yeah. Okay, how many of you will not be sleeping tonight? That means that at 2 a.m. you will be watching the FOMC. All right. How many of you are going to watch the FOMC meeting tonight at 2 a.m.? Okay, now, how many of you, if you're going to watch this at 2 a.m., okay, all right, then I will tell you this, okay, if really, if my health is still okay by the time that happens, I may open 2 a.m. FOMC MAO. I may open, not 100% will, but I may consider that, because tonight I have a meeting at 8 p.m. It's an important meeting for me, so I will be definitely have to entertain a little bit. So I scared that I oversleep. Okay, overslept. All right. So I may do that. I may. I won't say I will. I say I may. Okay. M-A-Y, may, not will. Okay. All right. Okay. All right. So I will see. I'll consider. Yeah. If you guys are there, watch out for me. If you do see that, do love and like my page yourself. So if I do that, I will inform and. Yep, let's watch it together, okay? All right, okay, crazy, yeah. I think I'm crazy already. Huh? What is that? I grabbed strong kopi for you. Okay, guys, I think I'm the only one in Singapore that do that crazy stuff. Okay, sorry, let's continue. Sorry to drag your time, also into my time too. Okay, let's look at the China market. Wow, look at China. Oh gosh, what happened? So seemingly the China power comes in again. Wow, look at it. So we were telling you that there will be some resistance around here itself. Okay, and China market did that, very, very clear. It has done that. But obviously now we can see that with the China power like this, that means that it's the government forces coming in. And this is usual. Yeah? Right, when I saw the earnings, I saw when they are trying to make sure that their earnings are really real. I mean, we do see such incredible, phenomenal they will do just to verify and facilitate their so-called numbers. So I will tell you up front here, guys, be very careful. 1, 2, 3, 4. Okay, just be very, very careful after 3 p.m. Right? Now, Hong Kong market will continue under 4:30, correct? But China stock market will continue working until, now it's still trading until 3 p.m. So at 3 p.m., the China stock market will close. Then Hong Kong Hang Seng will get into reality, okay? I think this is another thing for you to watch out for, okay? Now, if you look at the chart now, I think it's going for it. This is the chart view that we have right now. You can see this is A, this is B, and this is where C is coming in. And of course, it's likely going to break the moving average. It has broken the MA 200, very strong move. But of course, the RSI, the common point is this is lower. So usually it's a telltale sign to sell than to buy. Right? Usually it's a more telltale sign to sell than to buy. So, okay, now you do whatever you do because you have about another 1 hour plus to push the market. I don't know how high you're going to push. But it's okay. Anyway, today we are long on Hang Seng also, so no problem. But the point is this. No, this is not good because you shouldn't do that. But of course, it's a very normal thing when you guys when your backyard tell you that you're actually losing money, but you tell the whole world that you're making money. Yeah, then you pay lah. So there will be price for everything. Yeah, it's always a price for everything. If you want to let the whole world believe that you are doing well, then be it then. Okay, all right. So just for you to take note at 3 p.m. when China market closes, take note of Hang Seng. You may have a potential trade over there. Okay, potential. I'm not saying that you will. It's a potential. Okay, so see Hong Kong now is gushing up. Boom. Okay, went up already, right? Now Hong Kong today is above a pivot level, above OP, above pivot 1. So that's the reason why Hong Kong today is a buy. Can you see that? All the way it's a buy. Yeah. So maybe Hong Kong will go even higher. Let's see Hong Kong, how high would it go? Well, Hong Kong has came down. You can see Hong Kong has came down all the way, triggering the pivot, sorry, the BMB -1x1. And then after that, I told you usually this form a base for support, and indeed now it really recover. So everything is really there. Where's the support over here itself? That is at 21,578. So I think later on, the Hang Seng may actually test somewhere around here. Yeah, it may test as long as the China market is pushing up itself, right? There's a chance that Hang Seng may test 21,578. That is the support level that was previously at the BMB level. Now, of course, you can see on the screen, the KSI is still green, but it's a downtick green. So there will be some selling pressure along the way. Okay, just take note of that. So to me is that if the market really hit this point to 1,178, there could be some profit taking later around that. Okay, Hang Seng, now see Hang Seng is moving up already. I told you it will likely be moving up slowly towards the level that I share with you. Yeah. Okay, it's moving up. Okay, now it's 400 already. Okay, yep. Okay, so everything is going according to plan. Okay, all right, so let's continue back to the Dow Jones. Sorry to jump around because I want to see the Hong Kong first. Okay, now US Dow Jones today, let's just do it very slowly. It's below moving average 200, it's below moving average 30, and it's also now has just triggered the MLP at 30,484 and pull back. Now, I share this with you, right? If this MLP is here, if the market basically stays above MLP, it's a buy. If it stays below MLP, it's a sell. If the market goes below MLP, it's a sell, go above, it's a buy, right? Okay, fine. That one we learned before. Now, extension, yeah? If the market hit MLP and rebound, this is a buy. If the market hit MLP and come off, it will be a sell, okay? And the sell is bigger, right? You see that? Okay, so this is the problem here. The KSI on the MLP, sorry, the KSI on the day chart is a downtick but red. So that means that the selling pressure will be there. And it's not as strong as yesterday, but it still is there. Okay, so now you can see on the screen right now, the market basically opens over here this morning, went up to MLP, all right, and then it went up, so stay above, it was a buy, but it was not high enough, but it was good enough to trigger KTR +1, okay? But now you can see very clearly, this is a CCYR with a BMB, and it has now broke below the MLP. So which means that now the OP is a very, very important level to watch. So if the market really breaks below the ML, oh my goodness, do note, yeah, Bitcoin has just lost 21,000. Oh gosh, Bitcoin have just lost 21,000. So which means that, right, if let's say this, what do you call this, market, the Dow Jones later break OP, right, it will be a flush down very fast to here, to 30,295. Okay, boys are selling already. Okay, boys are already selling. Yeah, take note of that. Okay, all right. I'm gonna jump the gun to Bitcoin first. Yeah, sorry. Yeah. Oh gosh, this is bad. This is really bad, guys. Okay, guys, take a look now. Bitcoin. Oh gosh, Bitcoin is coming down right now, and it's lost the 21,000 level. Yeah, lost the 21,000 level. Now I already shared with you guys. Bitcoin cannot go below 21,000. It's a very, very scary thing to happen because that means that later on itself, many companies will have problem. Oh gosh, if the Bitcoin continue to go down today, all right, there's a high chance it will go down to 19,701. Oh gosh, this is really bad. Okay, now the KSI is red, is downtick. So actually the selling shouldn't be strong. So that means that somehow there could be some external factors coming in. All right, but you can see the blue bars are still extending downwards. The green areas are heavily there. So the selling is still available. So that's indeed there is a chance for the Bitcoin to go down to 20,000. Now, if this is going to really go to 20,000, I tell you, there will be more problem for Tesla and MicroStrategy. Oh gosh, this is really bad. This is really, really bad. And it's all happening right now. And timing is 1 p.m., right? Remember the special timing I told you, 1 p.m. to 3 a.m. Okay, it's all happening. Let me just see the chart. Oh gosh, wow, it just really happened at a stroke of 1 p.m. Now it's at 1:24, right? So 1 p.m. should be here. Oh gosh, at a stroke of 1 p.m. exactly. Oh gosh, it's a bit funny. Focus, yeah. At 1 p.m. this is here Singapore time. Boom, it's happening. Gosh, is that a sign? Oh gosh, the Dow Jones has also broke below. The Dow Jones has also broke below, guys. The Dow Jones has broke below the opening price. I think the Dow Jones is going to get affected by the effect of the Tesla. Because Tesla is inside there, and also MicroStrategy itself. So yes, indeed, I believe that live now there is a chance for the Dow Jones to come down here to 30,295 soon. We are about 1.5 hours before DAX open, and of course DAX will definitely get hit also because DAX itself, a lot of these countries in Europe are also involved with cryptocurrencies and stuff. Oh dear, this is so bad itself. What's so special about 1 p.m. to 3 a.m.? You missed that part itself. Then watch it. Watch the MAO again. Okay, earlier just now. I think you missed that part. You skipped that front part, right? That's why you only focus on this part now. Is it? That's why I see some people left earlier. Oh gosh. Okay. Anyway. Okay, guys. This is the Nasdaq. This is the Dow Jones, and I'm gonna come back to the Nasdaq right now. Okay, the Nasdaq is now down. Okay, oh dear. You notice that today the Nasdaq is a DJDD. Oh gosh. DJDD means what? DJDD means that the market today might be going into a directional move. A directional move, yeah? So if the market stays above OP, it will be above MLP, above pivot 1, it will be a buy, okay? If it stays above OP and above pivot 1, it will be a buy. But if it's not, if it just now has already triggered the pivot 1 and it's trading below MLP, it will be a very heavy sell. That means that tonight itself, right, Nasdaq can really sell. So if let's say the Nasdaq really come down, oh my God, Nasdaq can really go down to 10,869. So think about this: if the FOMC, if Jerome Powell and friends decided to really give the 75 basis point times 2, oh my God, the Nasdaq will sell. So now the Nasdaq is down, is at 11,340, right? Oh my God, that means that the Nasdaq can drop by 500 points tonight. Holy cow. Oh, this is crazy. This is really mad. There is a chance that the Nasdaq can drop by 500 points. Ooh, it's a lot of money. Now, of course, that means that obviously Tesla will have to be hit. So now understand why it's seemingly like a scripted thingy now that Bitcoin is coming down right now. Okay, it's still Bitcoin now. It's down at 38,900 plus. Okay, so if Bitcoin goes down, Nasdaq will definitely comes down. Hang Seng will be hit and across the board. Okay, this is crazy. My gosh. But you can see that at the moment now, right, my KSI is green. That means there's some buying interest, but you don't just ignore this. You concentrate on the red one. Yeah. Okay, that is Nasdaq for you. S&P 500. Oh gosh. Okay. Oh my God. S&P 500 is also a DJDD. Oh, did you notice that? And it also basically had touched the MLP and rejected MLP. KSI is red down tick. So which means that it will have to come down. Now, interesting, 3651 and 3654 is a stack. KCB stack. KCB stack with pivot 2. Okay, so that means 3651. Oh my God! Remember the calculation we had earlier itself? Remember the calculation we had earlier? I told you, right? What's an S&P figure that we just now calculated? That if the market is to go down to 29,563, remember that? What was the S&P figure? Anyone remember it? What did we calculate earlier? If let's say now, if the market is to pull back downwards okay, to 29,563. What was the S&P level that I mentioned that we calculated earlier itself? Anyone remember or not? Anyone remember? Okay, waiting for you guys. See anyone remember that? No, not 3668. Yes, correct. Jerry, you're absolutely right. 3635. Correct. 3635. Holy God. Can this be the one? Can today be the one? Oh gosh, this is getting crazy as the minute goes by. It's just like as if that everything is just scripted for us to just have to follow. Yeah. Now, if this really all happened itself, right, then yes, indeed, this is going to be a very crazy time. Jerry and Kareem, yeah, right, 3635. Holy God. Okay, Hang Seng is still coming down a bit off the highs right now. Earlier it went up, okay, but now it's seemingly having some resistance at the level now. I think because the Nasdaq is coming off a bit, so this is coming off. China market is also kind of resisted right now at the moment. You can see on the screen. Okay, it has touched the moving average, but it's off the highs a little bit, so still not a lot. Okay, but just watch it. Okay. Okay. Anyway, let's continue. DAX. Okay, DAX, I already told you back then it was a sell already on DAX. It was all the way up. Then after that, right, it took 14 days to go up, 3 days to get it up. So which means that now DAX will have to go lower. My pivots are not ready yet. So I just leave it first. We will look at it later on. But DAX itself, right, if you really go down all the way, DAX can go down all the way down to 12,478. So now we are 13,310 without today's market yet. There is a chance that the DAX can go down all the way to 12,478. That means that it's almost 1,000-point drop. So it's possible because if the Dow Jones will drop by, let's say 800 points, DAX to go down by 1,000 points, yeah, okay, I mean, sorry, 900 points. It's possible, right? It is possible, yeah? Oh gosh, this is getting mad. This is getting crazy. Okay, anyway, let's continue. Nikkei. Now, Nikkei, as you can see, I told you to get out of Nikkei back then. I told you don't buy the Nikkei. I tell you Nikkei will drop, and Nikkei really fell. So Nikkei now is dropping further. There is a chance that Nikkei will have to test this level now at 25,699. Oh gosh, all the figures are far away. So which means that, right, this is a full yellow, fresh chocolate bar, yeah? This is a fresh chocolate bar. I repeat, all my TWB students, this is a fresh chocolate bar. So which means that if the market is going for it, right, most likely this will be triggered, okay? So fresh chocolate bar means that the market is a V, right? V, yeah? So that is a possibility. Okay, take note of that. KSI is red, and at the moment now, the KSI is increasing in strength. So that means that there is a high chance that this may actually be happening, okay, in the near term, okay? Watch out for Nikkei. Oil price. Now, I believe now with this Joe Biden releasing this thing here, oil price should have had some downside movement. But you can see the boys are still buying rather heavily, all right, even though the buying is a bit weakened right now. But it's a new BMB altogether, so which means that now the revise the tape. Okay, so which means that for now, if the big crypto, I'm sorry, if crude oil breaks 12097, 12097, crude oil will go to 127. Oh gosh. Now, if crude oil go to 127, that means more interest rate hikes have to come in and things will get even worse. Okay. So at the moment now, let's hope for the best that it stays down for the good sake of all the drivers in Singapore, but very difficult, yeah? I still put my moving average at 114.70 as a point of support. Let it come down first. It was triggered yesterday, by the way. Yesterday, right, if you look at it, the chart, everybody, the crude oil actually came down. and it actually really hits the moving average yesterday at 114, sorry. And then after that, it rebounded. So this moving average is very powerful to use, yeah? So 114 is a very powerful level. So watch out for that, okay? So hopefully that basically hold it up, okay? Now I can see that Bitcoin has recovered a little bit, yeah? Bitcoin is trying its best now to stay above the 21,000. Now let's hope that it stays up. But I say again, if this is just only trying maybe some funds coming to buy to prevent it from going down to 21,000. But if it laps, right, the selling will come in. Yeah, this is usually the case. Now it's always very dangerous to be trying to catch a falling knife, and this falling knife itself have been there for quite a while. If you look at the chart again, jumping down a little bit, everybody, take a look. Because I know some crypto fans here as well. You can see that there's a white yellow chocolate bar down this area, right? So this chocolate bar itself, right, is showing me that it will likely be going there. So that means that the market is going to head towards here, and that's below 20,000. Yes, it's below 20,000. So it's not a good thing to buy now Bitcoin. Yeah? Don't buy now. Yeah, don't do that. It's going to be very dangerous for you. Okay, it's catching a falling knife right now. And again, a lot of margin calls will kick in. Okay, a lot of margin calls will kick in very, very soon. Oh gosh, wrong side. Okay, all right, continue. Sorry to jump around. Okay, right, let's say gold now. Now, gold will definitely have under some pressure today, but of course, this morning, gold recovered a little bit after some selling yesterday. But you can see the KSI is still red in color. Blue bars are still extension downwards. So, sorry, the opening price today is 1807. Yep, 1807. The market is trying to firm above it. Once the market loses 1807, gold will come down very fast to 1791. Now, 1757 is a BMB level, which I don't think it will hit unless something dramatic happens tonight. If not, it's all right. 1791, I think will be fair for tonight. Yeah, 1791 for gold. Silver, same thing. Silver, most likely, if it breaks the opening price at $21, it will likely be coming down to and break pivot 2, right? And then what may happen, we may see 1991. Now, it's been a long time we see 1991. If it does happen, it coincides with the KCV. So I think that this will give a market a bit of support over here. So maybe the market may support the rebound. So watch out for silver below $20 to buy. Okay, $20 to buy. All right, so Bitcoin, I already tell you my thing about my stand here is on Bitcoin. And last but not least will be Ethereum. You can see Ethereum is also coming down. I already given you my number. Ethereum, the best time to buy, I think, in my opinion, now is 990. Yes. All right, 990 area will be a good time to look at it. Ethereum, let's look at it. If you're comfortable to buy some, you can try, because anyway, the high was at 3,000 plus to 4,000. If you're buying now, you're buying at 1/4 of the price at the high. But of course, it doesn't mean that it cannot go lower. You may go down to what, a few $100s. We never know, right? But at least for now, most likely we will see somewhere around here first. Okay. All right. Last one before we go, I don't look at the dollar yen. There's a quick one on the dollar yen, a very quick one. The dollar yen itself is now trading about 135 level. But I believe that once the dollar finds strength again, it'll go back up again to 136. Okay, I believe the yen is going to 136, and the euro. The euro right now is trying to recover, but it's a DJDD. So if the dollar later finds strength, it'll come back down to 103 level. That's 104.625. I believe that this is just a fake movement. Likely later on, we'll bring it down back again. And of course, last one is pound. Right, pound is the same thing. Most likely, pound is just going to stabilize a while, then you come back down to 118 level. Okay. All right, so that will be all for today's MAO. Thank you very much. I hope you liked the sharing today. I wish you all the best. Whether we have this ad hoc MAO tonight at 2 a.m., I will let you know, guys. I wish you all the best. This is Cal signing off. Bye-bye.